Hey everyone, welcome back to Corporate Decoder. Today, Calidi Biotherapeutics Incorporated just filed an 8-K announcing a new lease and lease termination, and I'm seeing a significant cost savings that could impact their bottom line. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is moving its headquarters and cutting rental costs by over $1 million a year. Let us dive into what that means. Calidi Biotherapeutics Incorporated is announcing a shift in its operational base. They are entering into a new lease agreement for office and laboratory space and at the same time terminating their old lease. This move is happening around July of 2026. The really interesting part here is the financial impact of this relocation. The company estimates it will save approximately $1.1 million per year in rent and other facility-related expenses. This is a substantial saving for a company of this size and could significantly improve their profitability. Think about what that inflow of cash could be used for research and development or other growth initiatives instead of just paying rent. Now let us look at the details of this new arrangement. The new lease is set to begin in October of 2026 and will run for 44 months, which is just over 3.5 years. It is for about 9,000 square feet of space. They also have an option to extend this lease for another 3 years if things are going well and they are occupying at least half of the space. This gives them some flexibility for the future. As part of this new lease agreement, Calidi Biotherapeutics is required to provide a letter of credit. This is like a financial guarantee for the landlord, and in this case, it is for about $113,000. This letter of credit needs to stay in place until well after the lease ends, and the landlord can draw on it if certain conditions are not met, which are standard in these types of agreements. Alongside signing the new lease, the company also formally terminated its previous lease agreement. This prior lease was for space at 4475 Executive Drive and was originally set to expire in February of 2027. The termination is effective the 30th of September 2026, precisely when the new lease is expected to begin. This ensures a smooth transition between the two locations. A key piece of information in the lease termination is that there is no early termination fee being paid to the previous landlord. This is very positive, as early termination fees can often be quite significant and costly. The fact that they avoided this is another win in their cost-saving efforts. This section basically confirms that the new lease agreement creates a new financial obligation for Calidi Biotherapeutics. It is a standard disclosure that points to the actual lease details we have already discussed, essentially serving as a reference to the material definitive agreement. This filing also includes the actual lease agreement as an exhibit. While we do not need to go through every single clause, it is important to know that the full details of the new lease are publicly available. This is Exhibit 10.1, and it provides the complete terms and conditions of the new rental agreement. Similarly, the agreement to terminate the old lease is also filed as an exhibit, specifically Exhibit 10.2. This document lays out all the specifics of ending the prior lease arrangement. And finally, the report is signed off by Andrew Jackson, who is the Chief Financial Officer. This indicates that the financial aspects of this lease transaction have been reviewed and approved at the highest financial level within the company. This gives us confidence that the reported cost savings are indeed a strategic financial move. Looking at this filing, Calidi Biotherapeutics Incorporated is making a smart financial move by consolidating their operations and significantly reducing their overhead. The estimated annual savings of $1.1 million is a substantial amount, especially for a company of its size with 29 employees. This kind of strategic cost management is exactly what you want to see from a company focused on growth and innovation. It frees up capital that can be reinvested into their core business, like their biotherapeutics research. The fact that they managed to avoid an early termination fee on their old lease is also a big win. While leases and financial obligations are a regular part of doing business, the magnitude of these savings and the clear strategic intent behind this move make it a noteworthy event for Calidi Biotherapeutics. The risk I am watching is ensuring the new premises meet their operational needs now and in the near future. But based on this filing, the outlook seems positive for their operational efficiency. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Check out the Discord in the description.